Money sitting in a savings account is quietly losing value to inflation. And I get it. Most people don't want to take big risks. But what if I told you there was a fund that's been around since the Great Depression and almost no one's talking about it? I'll show you exactly what it is and how it survived everything from the Great Depression, World War II, the Great Financial Crisis, everything. And the best part, over the past 10 years, it's actually beating the S&P 500, all while giving out a fantastic 8% yield. ADX is the Adams Diversified Equity Fund. It's a closed-end fund that's been continuously operating since the Great Depression in 1929, not since the 90s or 2000s, since before almost every fund you've ever owned existed. And as a CEF, or a closed-end fund, it currently has a targeted yield of 8%. Many closed-end funds have higher yields. And don't worry, if you don't know what a closed-end fund is, I didn't either until a few years ago. You'll be up to speed by the end of this video. So in the top 10 holdings versus the S&P 500, we see a lot of staples. Apple, Microsoft, Nvidia, Amazon. ADX holds a diversified portfolio of large cap, high quality companies and pays out distributions to shareholders under a managed distribution policy, meaning the fund targets a specific payout each year rather than simply passing through whatever income happens in the portfolio that year. It's currently set at 2% per quarter, and historically, a lot of investors shied away from this fund because it used to pay one big distribution at the end of the year. But as of January of 2025, they've moved to this targeted distribution strategy, which has helped smooth out those distributions throughout the year. Looking at Seeking Alpha, we see that since January of 2025, it's been paying consistently between 47 cents and 50 cents per quarter. The target is 8% per year, but that does fluctuate as the net asset value fluctuates. But it was actually over the target of 8% just earlier this year. And in the title of this video, I did mention SAFE. And ADX has survived the Great Depression, World War II, the 1970s stagflation era, Black Monday, the dot-com crash, 2008 Great Financial Crisis. It's still here, still operating, still paying shareholders. It's survival tested at the level almost nothing else in the income investing space can claim. One thing worth understanding clearly, because this is a managed distribution policy, part of what you receive as a shareholder each year can include capital gains distributions, not just purely investment income. This chart shows a breakdown of the last 5 years, and we can see it's predominantly been long-term capital gains. This is not a red flag. Plenty of well-run funds operate this way, but it is a different mechanism if you're used to ordinary incomes or a more traditional dividend stock. So this fund actually uses no leverage. So the distributions that you are getting actually comes from active management buying and selling of shares. So if you do buy this, I think their track record speaks for itself, that they are very good at producing returns that are larger than the S&P 500. And this isn't the fund I'd point out if you're purely chasing the highest possible current yield. There are covered call ETFs and other income funds that will out yield this in any given year. What ADX offers instead is something you can't manufacture with a fund that launched 3 years ago. A genuine multi-generational track record and an underlying structure that shows that it's held up no matter what the market's thrown at it. If part of what you value as an investment is knowing that it's been stress tested by literally every kind of crisis the market has ever produced, that's the actual case for ADX. So if this seems interesting to you, but you have no idea what a closed-end fund even is, this is the part of the video for you. Because I myself had no idea what a closed-end fund was until around 2 short years ago. You can spend hours researching this, and that's for another video. But in the simplest terms, unlike an ETF, a closed-end fund is exactly what the name implies. It's closed. That means there's no mechanism to produce new shares or to reduce shares on any given day the way an exchange-traded fund would do to hold the NAV stable. This means it's almost like posting your stuff to eBay. It's only worth what another investor is willing to pay for it on any given day. That means when things are good, you might actually pay above the net asset value. But here's the other side. What if the market's in turmoil? What if a press release has come out against this fund, or there's just some fear, uncertainty, and doubt spreading through the market one week? You can actually pick this fund up well under its net asset value on occasion. So if you're looking for strategic entry points, CEFs may be up your alley. because when that net asset value gets closer to par, not only will you pick up the distributions, you'll also gain in price appreciation as the NAV gets closer to its par value. And a lot of people shy away from CEFs due to significant fees, but ADX's fees actually just 0.49%. So that's much higher than total broad market index fund. But if we pull up the 10-year, 3-year, and 1-year chart, I think you'll see that it might actually be worth it. So when looking at the 1-year chart, we can see that ADX has outperformed the S&P 500, returning 30% on a total return basis versus the S&P's 500, 21.65%. If we zoom out a little more to the 5-year chart, we see a bigger gap develops with ADX returning 104% versus the S&P 500's 86.5%. And then on the 10-year chart, the gap widens further with ADX returning an astonishing 448% versus the S&P 500's 319%. If we go all the way back to 2010, we can see that it's returned 1,021% versus the S&P 500's 839%. So this fund has a long track record of outperforming on a total return basis, all the while maintaining high distributions. And I want to mention one caveat that I know people will probably bring up in the comments if I don't. This fund actually does, by default, generally, depending on your brokerage, pay out in actual stock its distributions. So usually you will need to go in, if you do buy this, into your brokerage and either turn on cash settlements or select that you do want to receive the additional shares. So that's ADX. Not the highest yield you'll find in the space, but arguably the most battle-tested fund structure that's still operating today. If you're building a long-term income portfolio, it's something worth considering and looking into further. Had you ever heard of ADX before this video, or is this your first time? Let me know in the comments and subscribe if you want more deep dives into funds that most people have never heard of.